What's up, everybody? Hope you're having a great day. Today, I just want to tell you guys how I made $69 today selling a call credit spread on SPY. As you can see, the P&L for the day is $69. I'm happy about this, guys. I had a loss the other day. 2 days ago, I lost a trade. I was doing a put credit spread on SPY and QQQ, and I lost. The market is bearish right now, guys, and I had just been researching a lot about put credit spreads, and I thought it'd be a good time to. I was just really focused on put credit spreads. I didn't even consider that I should be selling call credit spreads. If you guys don't know what the difference between what a put credit spread and a call credit spread is, a put credit spread is where you're basically betting that the market is going to go up, and a call credit spread is where you're betting that the market is going to go down, basically. So let's go ahead and take a look at the chart. All right. So now, right here, guys, as you can see, I was right. The market did go down, and it really went down. Like, we're down 2% on the day. Like, that is crazy. I thought it was going to go down, but I didn't think it was going to go down this much. So let's just take a closer look at what happened here. All right, so this is where I was kind of at when I started placing the trade. This is what I saw. Specifically, I was in like this area right here. Okay, and so what did I see that made me believe that the market was going to go down? So the biggest indicator that I look at, my favorite indicator, is the MACD. Okay, guys. As you can see, there's a blue line and an orange line here. Okay, so when the blue line crosses over the orange line, that means the market is in an uptrend and the market is likely to continue going up in according with the momentum, right, of the trend. And on the flip side, when the orange line crosses over the blue line, that means we are looking at a shift to the downside. Okay, and so I saw this, how it crossed over here, and I knew that it's likely to continue going down because it had crossed over. So it crossed over, and right around down here, right in this area, I believe I entered the trade. I saw that the orange line was above the blue line and it was trending downward. So I took a look at the option chain and I said, okay, what do I think is it not going to go above? Right? Now, at first, I was like, well, I want to set a strike price at 570, right? Because I feel like that's more safe. But I looked at 569, and 569 was giving me more premium. I wanted more premium to make back the loss I had earlier, so I decided to play it a little more risky at 569. I had around an 80% chance of profit, and the MACD was in accordance with my trade, right? It was trending downward. So I placed the trade, right? I set the strike at 569. So what that means basically, guys, is that if the price would have gone back up above my 569 strike price, I would have lost money. Okay? As long when you're selling a spread, when you're selling a call credit spread or a put credit spread, all you have to do is make sure that the price does not go above or below a certain level. So as long as the price stays below this level, you're good. You win, you make money, and that's how I was able to make money, by betting that the market, the price was not going to go above this level. I also set a 568 line here just as an alert, so that it would alert me, give me a notification on my phone if the price did go back above this level, and then I would monitor the trade closely and maybe close it out. And so let's just take a look at how it played out. So right here, I was watching it, and I was really hoping that it would break through this area right here, because this is, I see how it bounced off here and went back up, so I just thought that this was kind of a support area. Broke right through there. I thought it was good, and then it just kept going down. It kept going down, and it just kept going down, guys, And yeah, I mean, look at that right there. It just kept going down, kept dropping. At that point, I was chilling. I was like, yo, it's not going back up above my 569, you know. And I was just pretty happy because I know, I pretty much won the trade because the odds of it going back up that much is very low. And so technically, there's a chance I could lose the trade if it somehow just shot all the way up here before the end of the day, but that's very unlikely to happen. So we locked in that win. Very nice, guys. This is my first win with a credit spread. I'm so excited and happy about this, guys, because I just feel like this is the start. This is the beginning of my credit spread journey. I want this to replace my income from my job and just be financially free. Just put on one trade a day, win, and just be chilling. And so yeah, that's pretty much it. I was able to pull in $69 of profit. Now, if you are trading the SPX, you can make a lot more money. Like, but I just didn't have enough um, buying power to place trade. You got to have like, I think I was looking at it. You need to have like 370 to 400 to place a trade on there. So I got to build up my account a little bit more, and then I'm going to start trading on the SPX, which is basically like SPY, but it's just 10 times larger. So, yeah, that is it, guys. That is basically the summary how I won my first credit spread. Well, I didn't win. It was my first win. I lost the other day. I made a short on it. It was pretty unfortunate, but we're back with a win number one, and it feels good. And yeah, if you guys are wondering what platform I'm trading on, it's called Tasty Trade. The reason why I chose Tasty Trade is because um, they allow you to trade level 3 options, which means you could do put credit spreads and call credit spreads without having $2,000. On Robinhood, you have to have $2,000 in your account to um, enable margin trading, and then you get level 3 options. And I didn't want to wait, so I had $2,000 in there. So start on Tasty Trade. They have pretty low fees. It's like $1 per contract or something. So it's pretty cool. And it may look complex, but once you get the hang of it, it's pretty simple, guys. I hope that this video has enlightened you to the fact that you can make money selling credit spreads, and I feel like it is the safest way of trading. I haven't actually tried regular trading for real, but I was doing binary options before this, and man, that was so risky. I was basically betting whether it was going to be above and below within a minute. Now I have a whole day to be right, and so yeah, it's just a lot better. And I really like zero DTE, basically just being done, having to collect my win in one day. It just feels really good, guys. And yeah, I encourage you to look into credit spreads if that's something you're interested in. You think you can potentially make money with it. I love it. Like I think that this is gonna provide me financial freedom, and yeah, I'm just really excited for the future. But yeah, guys, I hope you learned something from this video, and God bless you. Have a great day.